Greetings. I see that we have some attendees starting to come in. Hello, Jonas. Hello, Sergey. You can reply if you want to have any ask any questions in process. You can write in chat. And let's see. Oh yeah, I see. I see your message. Wonderful. So we expect a few more people to join, but we will not be waiting. Some people might be joining in process as well. So I guess we will begin. Oh, hello, Tapio. I see Tapio has joined as well. So yeah, but as people join in, I could perhaps start. So if you are new to Invest for Excel, I can quickly go through an introduction and just quickly explain what is the company behind it and who are using this Invest for Excel for financial modeling and how, and also then what they use it for, and then of course the best practices of financial modeling, which is the main topic of this webinar. And I guess we can begin, right? So I hope that everybody sees my screen now. Let's see, we can test this raise your hand feature. Can you raise your hand if you see my screen? I see Tapio, Jonas, Sakri, can you see? Okay, yeah, I see. Great. So yeah, well, so yeah, let's begin. Basically, Invest for Excel is the main product of Data Partner, which is used for financial modeling in Excel. And by itself, this software represents the best practices of financial modeling that we have gathered over more than 30 years of working in this field of financial modeling, with more than 1,500 companies from 56 countries. So we learn from every customer, from every case we've gone through, and every piece of feedback we get, we have put into this software, Invest for Excel. And it is something that anybody can have on top of their Excel. It's still, that's why it has Excel in its name. It sits on top of Excel, and it is a best practice to use Excel for this purpose, because well, all financial professionals use Excel for this kind of financial modeling. Usually it's self-built models. So Invest for Excel takes it to the next level. It can automate some tasks that are manual, like building the table structures and writing the formulas, and then let you have more time on the actual business case, where only you can do it. You know, well, everybody knows their own business the best. So it's best if they spend more time using their actual expertise and planning the business numbers, business figures, the forecast, and how much something will cost, how long something will take, instead of the formulas, layouts, and so on, something that is just very prone to make a mistake and so on. So we try to take that part away from you so that you don't have to worry and feel more safe. Okay, well, few slides. Before we get into the software, we have a few slides about the Data Partner. So it's been established in 1987 in Finland, and since beginning it had a focus on financial modeling, capital budgeting, as they call it in the US. And today we have over 1,750 customers from 56 countries, and it's very international. So more than half of our revenue is coming from outside of our home market of Finland. And then we have a network of business partners who represent us in different countries, on different continents. And it's important to also remember that we are basically a company of one product. This Invest for Excel is what we focus on. And since we're using Microsoft technology, we are a Microsoft partner, and have been maybe one of the oldest in Finland. been working with Excel, with to some extent with SharePoint. And the reason, of course, is because that's what everybody uses. It's like industry standard worldwide for financial professionals to use Excel for this purpose. There's nothing wrong with that, except for something that can be improved. This slide is just to illustrate where our existing Investor Excel customers come from, and it also means that the same standard software can be used to model any type of business. As you can see, it's very diverse. We have a largest segment is electricity and heating. That's because in Scandinavian countries, there is a lot of electrical like energy companies in every city. They have their own, and by number they lead because there's just so many of them. But otherwise, it's pretty much distributed throughout the whole spectrum of industries. Construction, we have some chemicals, water treatment, energy, oil companies like Neste Oil and others, and paper companies like Stora Enso, and food and beverages like Fazer. Well, I'm just naming Finnish companies, but there's many international large companies like Daimler in automotive, and so on and so on. So yeah, and we at the same time we stick to one version of Investor Excel so that it will be equally simple to model any type of business from beginning. You don't have like a separate version for oil companies or separate version for banking or for construction companies. It's equally easy to model any of those types of businesses from the basic standard case. So you begin from beginning. Of course, there are possibilities to have templates, which you could have, for example, your company level templates, so that you would save even more time. So especially bigger customers of ours often do that the CFO makes maybe from 3 to 10 templates that are most frequently used types of projects, and some data would be already pre-filled there, and then so users can save even more time. But otherwise, it's not really necessary. It's always possible to start from beginning. Here are some logos from our customers. So maybe you will recognize some. So these are just highlights. The more complete list can be seen on our website. But there's a lot of successful companies that are known to be, leading in their segments, and they're trusting us with their capital budgeting, with the way they budget their investments. They trust it to Investor Excel tool. Many of those are using Investor Excel as a corporate standard, so that in some cases it's so that every investment that exceeds certain amount, like maybe 50,000 euros and up, would have to be calculated in Investor Excel format, because then they can achieve this corporate standard that every project goes through the same type of analysis, the same amount of scrutiny, and also when communicating between employees, they get it in the same format. It's much faster to learn, to read the project. What are the investments? What are the costs? What are the income? How does the cash flow behave over time? So yeah, it improves communication about projects as well, and it not just between the financial professionals, but also engineers, plant managers, site managers, anybody who is involved, maybe on local level or on central control level. So anybody from the ones who have an idea about some project and want to put it into the model to check its feasibility, to somebody who needs to make a decision about which project to go forward with, and somebody who makes an audit. They want to check if everything is correct. They maybe recalculate it from scratch using their own methods to make sure that there is nothing, no significant detail is missed. And of course, for final decision making for the meeting, there's some features that help with all of that. And not to be confused with accounting. So it's not for budgeting. It's for capital budgeting. So budgeting where ongoing transactions like ERP systems are taking care of that. That's separate. Usually, Investor Excel helps just with the process of selection of the best possible project out of alternatives, either alternative competing projects or competing scenarios of the same project. And then once it's selected, then usually once you decide, okay, we go with this one, then you create it in all those other ERP systems, accounting systems. You assign budget and so on, and then you start tracking it already on a more detailed level. We try to like limit ourselves to this area. We help with making the decision, and as well as follow-up decisions. So you could very well use it in half a year, in a year, to compare your plan versus fact, to see, did it go according to your plan, or is there any adjustments that needs to be made? So yeah, you can use that on an ongoing basis. And of course, many other scenarios, which I will go through in another slide, like valuation and so on. But yeah, there is one slide that actually quite interesting, that we have a lot of customers now in academic world. And the reason is that Investor Excel is built in such a way that it makes it easy to learn those best practices of financial modeling. It sort of guides you step by step. Even if you're new to financial modeling, you can sort of, after just attending one training session or even reading a manual, you can figure out what you need to enter, what is next step in which order, and also you get the result and you have some hints about how to read it, how to analyze it. So this makes it perfect tool for education, and that's why it's used in some of the best schools, like we have Aalto, Hanken, and many others are using it in master programs, in bachelor programs, actually different topics. It can even be like hotel management or something else, like a normal business degree. Almost every degree has some part of financial modeling these days, or at least it should have, because it's important not just to know how to do something, but also how to make it feasible in a feasible way. And this exactly sort of helps you check that. Okay, so here's the application areas. So what is Investor Excel used for? It's used for overall capital budgeting, which is a big open topic. So there is many things that go into that. Overall, we could say that what is the best possible way to allocate company's budget with the best return on investment. So every company has this kind of problem, and depending on how they resolve it, the performance of company will depend on it, and success will depend on it. So it's a kind of important task to do right. And yes, so Investor Excel can help you distribute your budget in the most profitable way, taking into account, of course, technical analysis. We're not crystal ball to predict how markets will change or how sales will go in reality, but with help of your experience, of knowledge of this business, and also statistical trends. So just forecasting, if we like continue the line how it was going before, and so on. So technically, based on the numbers, we can calculate like what will be the outcome. And in some cases, with like Monte Carlo simulations, we can even have some statistical analysis, like what's the likelihood of some scenario to happen. So yeah, that's like, I guess, key area. And then it's used for business planning overall, to plan operations, what to do, which product to launch and when, and so on. It's used for evaluation. Basically, every calculation in Investor Excel, it's always evaluation. We're evaluating project based on discounted cash flows. So meaning that we are taking into account cost of capital, because always we have to get money from somewhere, and the money carries some interest, whether it's somebody else's money or our own money. So it's always an opportunity cost. We could have used it for something else if not for this project. So yeah, so that's why there's always the discount rate to which we're discounting all the investments and even income, and then we see if it still makes enough to pay back that cost of financing, and plus all the costs, of course, and then do we get anything left, which is the NPV, and so yeah, but in particular, there are some cases when you just want to make evaluation of the company to find out how much it's worth for the purpose of either selling it or maybe buying it. So you could, by adding a acquisition price to the valuation calculation, then it becomes an acquisition calculation. So then you're thinking how profitable it would be to sell it at this price. or then the other way around, if you want to buy it, so then how profitable it is to buy it at this price based on your vision of how the business will be going, and then the price to pay for it. And then even such complex calculation as mergers can also be done using Investor Excel. It goes into a little bit advanced level when there's a lot of variables, like some internal transactions between companies that needs to be eliminated, and some other effects that that are not necessarily always A plus B. There's some other effects that are going on. So, well, with proper mergers, you can do those, and then you can say consolidate several projects into one, and then you can also continue analysis of this on consolidated level of all the projects that you consolidate together. It could be all projects of your company if you like, and then you see, let's say, some sensitivity analysis. What if some environment variable changes, like discount rate changes, or something else, or some kind of currency risks, or anything else. So yeah, that's a big part. Then cost-benefit analysis, life cycle costing. So cost-benefit analysis is analysis when we are just analyzing different cost structures. So there's not necessarily have to be an income part. We just, let's say the government needs to build a road, so they don't have to charge anything from anyone. Well, even though they do with taxes, of course, but let's see that in particular case, they just need to build it. And so they just compare different suppliers and then cash flow models that go with them, and see which one is best fit. And not just companies, of course, not just the government, or any company can also take advantage of this. Let's say there is some investment that needs to be made to comply with new legislation. So that's also a case when you might need to compare cost analysis, cost structures. And so benefit could be just compliance. And then cash flow modeling overall. So let's say when you want to find out what will the cash flow be for this project, when can I do the investments in a schedule that I want, and then what kind of financing. Financing is a separate topic, but let's say that do we have enough cash on the first place to run this project, and then do we have then too much cash sometimes, so that we could use it better, reinvest it. So this can help you answer those questions. And then impairment testing is another interesting field. So it allows you to compare the goodwill value of your company, which is a significant part of valuation usually. That's where it is, of goodwill, and compare it based on your books versus your brand new NPV calculation. So you can sort of test your business. Is it still worth as much as you have it in the books? And if there is a big difference, sometimes it is, so you can write off unlimited amount from the book value of your goodwill, and therefore you can sort of have more precise value in your accounts. And of course, there are maybe more real reasons are like to pay less tax, so that you can write it as a loss, so that you don't have to pay tax on some income. And then also it improves your performance indicators if you have some kind of performance to assets. So assets would be like smaller, so then it would look better. And then plus companies that need to report in international accounting standards in IFRS, they actually need to do this impairment testing every year in order to comply with accounting regulations. Then financing. So financing module we have in our advanced enterprise edition. Even though financing doesn't really affect the profitability or the performance of the calculation itself or of the project, the return rate will be the same regardless of source of funding. But usually once you have selected the proper source of funding, next thing would be to actually find appropriate financing or a combination of different sources. So then you could just with one click, using this financing model that we have, with one click you can load all the cash flows from the calculation file into the financing file. So then you get it on a monthly level, exactly what are the investment cash flow, what are the operating cash flows, so what is the need for capital for operations, and so on. and then you can model your financing and withdrawals for financing exactly in line with your needs, so that you don't take too much too soon, but exactly as much as you need. Maybe you have some spare balance, positive balance on the bank account, but not much more, just to avoid paying unnecessary interest. And then likewise, you would also model the payback, how you pay back the amortization payments and interest payments in line with your cash flow capabilities, so that as soon as you have some good cash flow coming in and it's staying in your account, accumulating, so then it's good time to start paying it off. And so this can help you like guide this kind of financing conditions and negotiate it then with some source of funding. Then post-audit calculations is something that I've mentioned, that about this follow-up calculations. So you could do this kind of, after some time, compare what you have planned initially with some factual information and see if it matches. And maybe if you need to make any adjustments, or do you need to cancel a project if it doesn't go at all according to the plan, or maybe make some adjustments, or maybe it goes so well that you actually want to double down on it, or make it bigger. So yeah, it's a one usage scenario. And the product calculations, so all types of product calculation. When you have a product or service and you want to find out how to price it, it's perfect fit for Investor Excel, because you just model the whole business, and then price of your product is one variable that you can apply different type of analysis to find out what is break-even price, what should be the margin, what can be sensitivity effect, what if it changes plus minus 10, plus minus 20%, and visualize it and so on. So it's a good tool to test different values and to determine basically the proper price for your product or service, taking all variables into account. All right, so yeah, okay, well, I will not get into all the details because we need to still go through a case. This slide just shows you some features and some tasks that you do at different steps of creation model, analyzing the model, and sensitivity analysis, overview of scenarios, and financing and reporting. So each of these we could basically talk quite long about. We of course will be doing more trainings, more webinars, and in some webinars we will be focusing on some particular area in more detail. Now we just want to manage to go through on a bit high level into what the capabilities are. And if you, of course, if we have time, you can please feel free to write in the chat, and I could answer some questions. And also, by the way, there is in this webinar there is like chat functionality, and then there is also there is a Q&A, so you can use either one of those to send some message to me, and then I could comment. I'm not always looking at the chat, so I might not immediately notice it, but yeah. Okay, here's the next slide was, okay, I will say a few words about this value proposition. It's a bit sales slide, but like before Investor Excel, what companies have is very typical situation. Almost everybody we approached have the same, that they have self-built Excel spreadsheets, which are very often time-consuming to manage, and there is uncertainty about correctness. Those can get really complex, and if you give your model to somebody new, they will probably spend a lot of time just to understand all the logic, how it works, because there's many links, many formulas that go back and forward, sometimes linking some other files. So it can get messy and not easy to be flexible with when you need to analyze large amount of different types of projects. So, and with Investor Excel, basically this establishes this kind of standard, which has a lot of elements in it that make it easy to follow this best practice, and it makes it easy to spot a mistake if you made one or if your colleague made one. So it's much easier if you follow not just Investor Excel standard, but also some of our recommendations about, for example, to have as many variables as possible in separate row, so that you can see over time how each variable changes. So instead of having one huge formula with many variables, that links to many things and has a lot of logic in it. So that's fine, but if it's a like perfect formula, but if there is a mistake in either in the formula accidentally or on purpose, I don't know, or if there is some data that it links to become somehow faulty, so it's very difficult to read it and to learn that there is a mistake. Well, if unless you do it like we recommend, and as many as possible variables are on separate row, and when you can see how they're changing over time, and even if they are not changing, still you're seeing that they stay constant all the time. So it's very important to be more transparent. So then we have some comparison features that are built in. Even totally different project can be compared side by side, and so on and so on. And plus, of course, flexibility of Excel. So it's still based on Excel. So there is not any compromise of using Investor Excel versus just regular Excel. Everything else still works. You can even insert your own sheet and do some totally custom modeling and link it with Investor Excel model. And so that's totally fine. So that means if there is something that doesn't behave in the model the way that you like, maybe you have some special case, something unusual going on, so you could always do it yourself and then make it work still. So that's a great thing about it. All right, so okay, going forward, yeah, this Investor Excel is available in 4 different editions, from Enterprise, Pro, Standard, and Light. This is all available on our website in more detail. And also there is licenses that can be one big purchase upfront, and then 25% annual maintenance fee, which includes training, support, and updates. Or then the second way is subscription. So there is a equal annual payment. So it's a little bit affordable to start using with a subscription, but in a long-term license, it's actually cheaper to have. So starting, I think, was 3 or 4 years was like break even, when it becomes cheaper to have a license. And subscription includes as well training, support, and updates. Okay, and now we are at the case study. So I will be showing you my favorite case. So we will go through. We will start building from scratch a wind power plant calculation. So it's a calculation that we will be constructing a small power plant with 10 wind turbines. You know, those wind turbines that cost like €1 million each, and they are like the size of a football field sometimes. So they're big and they generate a lot of power, and they're considered like a green energy source, a good green energy source. And in many places they're being implemented, considered, and there's many suppliers that produce, like General Electric or some others, Siemens, and so on. And it's a good case because it's very like visual. For everybody, it's easy to understand the business. We just buy the turbines, we pay the construction company to put them together, and then we, once it's ready, we start. Well, yeah, of course, we connect it to the grid so that we can sell electricity to the electrical grid, and then we start basically selling the electricity that it produces, and of course doing some maintenance and some covering some operational costs. And we want to find out if it's profitable, if yes, then when will it pay itself off, and so on, and also analyze sensitivity. So yeah, and I will be improvising, so I don't have like a really real case. I've been doing this case many times, so it's not very difficult because it's very much simplified, but otherwise it's going to be improvised. Oh yeah, so now I just switched to Investor Excel software, and then so first thing maybe I could comment about is that when you have Investor Excel software running, Investor Excel replaces all your Excel menus with its own menus that allow you to quickly jump between functions, like as you can see here. This is Investor Excel menu. But at the same time, you can always switch back to Excel menus using this button right here. And then you can access any of the standard Excel functions. Like, for example, what we often use in our cases is what if analysis and goal seek. So that's Excel function, which is totally compatible with Investor Excel. You can achieve, let's say you want to achieve internal rate of return of 20%, and you want to know with what price we will get that 20% IRR. So just a few clicks and you can have it. This is one example. There's of course many other things. And then in this mode of Excel menu, you have the Invest for Excel menu available in this compact form. And then you can switch back to Invest for Excel, which we recommend to keep on. And this is available then. Okay, so this is home screen. What else? You have many functions available here with one click. And then you also have this user manual available, which you can open. And it opens like a PDF document, which is almost 300 pages. But you don't have to read the whole thing. The point is that you can search it either through table of contents or using normal Control F search. Let's see if I put break even, and here it is. It found it. Okay, it's actually a description of the menu, but well, and a few more clicks and we get to this. Well, here's break-even point chapter. So basically, it's just one example. It shows you some how to use one particular function. And yeah, so it's like a first line support with screenshots, with explanation, with examples. And if you don't find the answer here, then of course you can always contact data partner support, which is available by phone, by email, and by online chat as well on our website. All right, so what else? Well, let's get to building the case. Okay, well, one comment still that here you can also change the language, not only of the whole program, but you can also change of one particular file that you have open, so that you can even change it separately. Let's say you want to send, you have some partners in Russia, you can make a calculation in Finnish and then convert it to Russian language and send it to your partners in Russia. Or we have also so Finnish, Swedish, German, Polish, Spanish, Russian, and Bulgarian. Those languages are currently supported. We're actually adding new ones. Now we're planning to add Chinese and also maybe some, well, what was the other one? There was some other, was it Norwegian, I think, in our short list to be added. So yeah, let's get started. So I have an enterprise edition, which is the most advanced. It has like everything that is existing in Invest for Excel, and but we actually are not probably going to be using now only the features that are part of Pro as well, Pro edition. So let's see. We go to, oh yeah, one more comment that maybe is important to note. As you maybe have noticed, there is two file menus. First file menu is this. It's like Invest for Excel file menu. Sorry, Excel file menu, which opens full screen. We don't recommend to use that one. Instead, please use Invest for Excel file menu, so IFE file menu. And the difference is that if you save some file here, it will automatically offer you to save it in the right format, which is Excel macro-enabled workbook. Because in the other menu, there is a risk to accidentally select non-macro-enabled format, or it might sometimes offer it even. So then it would save it without macros, which is required for the model to work. And then also you have to get some extra features like save snapshot and save as PDF. Those are Invest for Excel built-in functions that allow you to do quite amazing like PDF. For example, you can select particular report that you want to be printed as PDF, and so there's some more flexibility there. Okay, and the same thing, we have the new file button here, and it offers me different types of file, like calculation file, comparison table file, investment proposal, financing, and so on and so on. We go to new calculation file, and then it yet offers me three different types because I have enterprise edition, so it supports those three files. So first one is more about new business planning. And the second one is about existing business valuation or corporate acquisition valuation. So you want to evaluate existing business and see effects on the group, and you have some also special residual value calculation method, and like with with the future value, and then also third is impairment testing, which is a separate template for that, comparing goodwill value to the NPV. Okay, we go to the first one, and it starts preparing the template for us. And otherwise, then next thing it offers us to save it, so we can select it, and webinar, let's say 24th of April 2020, wind turbine. Let's say also 10 turbines, calculation file. I recommend to put calculation file in the name of the file, because then you know without opening the file what type of file it is. Because you might have like comparison table, financing file, investment proposal file. They all look the same from outside. It's always XLSM. But if you have this kind of what type of file it is in the name, then you know it for sure. Okay, so that's good, and save it. So that was the first thing InvestorExcel asks you, to save the file. The second thing InvestorExcel asks you is to define the calculation term. So the easiest scenario is if your project is annual, you just say, okay, we start in 2021, and then it will be for 15 years. So ending in 2035, and that's it. It will be then on annual level. It will generate it for us. If we want to be more specific, however, we could go to detailed periodization. So that's important. So periodization by default, financial years. So we select detailed, and then it opens us more options here. We can then select which months we want to start our project, and then also we can select 2 different phases. And the purpose of these phases is so that you can have different periodization in different periods of time, which is important when you have some investment phase, when you make investments, and or construction phase. And so for that, it's important to know exactly when you need the money, in which months, so you can be more detailed. Because of the discounting, of course, the sooner you need it, the more expensive those money are. So if it, for example, was all on annual level, then there's a huge difference between taking money in January or in October, for example. So you could be more specific, and as specific as you like, but at the same time, let's say like monthly or quarterly. But at the same time, then you have this, once you're done with investments, you typically have this operation phase, which doesn't necessarily need those detailed periods. It just repeats the same year by year. And so it would be unnecessary trouble dealing with all of those smaller periods. That's exactly why we developed this kind of functionality that allows you to split your calculation in 2 phases, and all features of the program support that and are aware of this kind of switch from let's say monthly to all of a sudden annual, or quarterly and then annual, or like, doesn't matter, you can select anything. You can even start with annual and go to monthly if you like, but it's up to you. But the program knows that, and it will do all these calculations keeping that in mind, that you have some like change in periodization happening. Okay, so let's call this construction and operation. So 2 phases in this case. And then we could say that, let's say that we start the project in July 2020 this year. And then, so the construction will take 6 months from July until December. So, and so that by 2021, by beginning of 2021 year, it will be ready, and we can start selling electricity. And so the operation phase will kick in. And then operations, let's say that we want to look at 10 years, 10 years worth of this operations to see if it will pay off during this time. So this would be like our planning horizon. And now by default, it still looks at it on annual level. So that means interval length in months, 12. So 12, 12. So that means on annual level. And if, for example, now it's 12, but our period is only 6 months, then obviously that means it will be 6 months. So up to this level. And then But if you select something smaller, let's say if we select 1 month interval, then immediately it means we will have 6 intervals, 1 month each. And then if I select 2 months, it will be 3. If I select 3 months, it will be 2. And of course, anything else I select, it will be, well, accordingly. So let's in this case select 3 months, so it will be quarterly. So that means we'll have 2 periods from July to September, and then from October to December, 2 3-month periods, quarter periods, and that will be our construction time. And then from January 2021, it will be annual, 10 years. So 10 periods, 1 year each. So that's how we want it. Altogether, it's 10.5 years duration of the project. Again, there's more parameters here, like a moving calculation point to which point in time all the discounted cash flows are discounted. So you could move it around if it's needed in some cases. I'm not going into much detail, but you can also tell the program how to calculate the residual value, either to have the default option is to have a residual column in the end of calculation sheet, automatically calculates it, or then you can choose not to calculate it at all, or then you can use this perpetuity extrapolation and so on. Okay, I don't get into too much detail on that either. You can also enable historical periods. If it's an existing project which has some history, you can go up to 6 periods. And so this just opens up some gray periods available for input in most cases, and where you could put some data that maybe helps you to model the future. So let's say maybe you can continue some trend from the past. So it will be more visible. You can open up some periods and enter that data there. Well, in most new projects, of course, we don't have the history, so we just don't include it. Okay, we are ready. So it looks looking good. So I press OK to create this project. And now the magic starts to happen of Investor Excel. It starts to create the periods for us. So we don't have to ourselves. Small thing, but it matters. Okay, now it's ready. I'll show you the actual model shortly, but we are still at the basic value step, which is like a first step. And as I remember, I mentioned that Investor Excel sort of guides you step by step in the right direction as you enter all the required parameters. So first one is basic steps, basic values, where you can give the project a name: wind power plant, then turbines, and then you can also get back to calculation phase and make adjustments. If you made some changes, maybe you want to make it 15 years, not 10. No problem, just put 15, press OK, and it will regenerate the structure for you. So have to be careful though, if you are shortening it or changing, like say, duration of the periods, then that means your data will not be matched anymore. So you have to correct it afterwards. Well, to some extent, it might be still correct, but you still have to check it. Always have to check it when changing structure. So that's important. But yeah, and then notice that all the gray colored cells are highlighted, highlighted gray, they're editable. Everything else is protected. So you don't accidentally change something you're not supposed to. And then you can also jump between those gray cells using a tab key. Then what else? We can select here figures, say single, thousands, or millions, depending on the currency. So let's say we just now stick with single, and it will be euros. So the currency field is just a text field. You can type anything, and that text will be displayed in all the reports. However, if you like, you can also, there is actually a feature that allows you to compare, convert your calculation base currency from one currency to any other currency using one rate or even multiple rates. Let's say if you have historical data or future forecast, so you could convert. In order to do that, you just have to specify which rows. Now it's still empty, but once we're done with the model, you will have your own rows here. You're gonna have to select which are non-monetary, like kilowatts or hours, meters, and so on, so that only the monetary would be left here, and then it will be fine. It will be ready for conversion. So, and this is just for base currency. There can only be one base currency of calculation. You can at the same time still have sales in many currencies as long as you convert it with a rate before adding it to the cash flow. So that's separate topic. But if you want to change the base currency, that's the function to have it. And this function of change currency is available from Pro edition already. So, and Enterprise, of course, it includes everything. All right, next thing is a discount rate. So either you already know it, let's say 10%, which is commonly used, or maybe you have a corporate guideline that guides you how much it should return at least. And it also may depend on the type of project, whether it's a strategic project or it's like some kind of new opportunity project, or maybe it's a compliance project. Those usually have lower requirement, if any. So it really depends. And then if you're not sure, we have also some function that can help you. Let's say our recommendation is to base it on the WACC, or weighted average cost of capital. So, and here you can quickly calculate. So what is cost of debt? Let's say it's 7%. And then tax rate is 30%. And then we want to get 90% funded by debt, and then 10% by own equity. And then let's say we want a 15% return on our own equity. Well, let's put it higher. Let's say we want 30%. Well, whatever it is, it immediately shows you the WACC. And then you can use that with one click. I don't do that now, but it's just something you may be interested to know. There's also possibility to have variable discount rate. In some cases, that may be appropriate, like when it's changing all of a sudden in between or in the middle of the project. And of course, also there is a mid-year discounting is supported. So this is interesting. It takes into account that, by default, it works best if you, let's say you have annual periods and you have a normal traditional discount rate. Then it will discount all the investments for the full year, including the first year, like if it's annual periods. But in reality, you may have had like some of them happening in the end of the year or in the middle of the year. So it really depends on which part of the year most of the investments are happening. If they happen to be more concentrated around middle of the year, then mid-year discounting is more appropriate, because then it will calculate only half of the first discounting year. And however, if it's all in the beginning of the year, then it would be more appropriate to keep the traditional method. Also, if it's at the end of the year, it would also be closer. Like if most investments are happening at the end of the year, the mid-year discounting would still be more correct as well. So in some cases, it can be appropriate. Okay, then tax. So let's say 30%, you can enter it. And there is again some tax-related functions like, well, let's say if you want to include positive tax effects, for example, if you enable this checkbox, then whenever your project has loss, model will calculate positive tax as if government was paying you. And the reason is that because this is only true if you have other projects which are generating profit. So by having a loss in this project, you pay less tax in those other projects. So that means a positive tax effect. So you sort of get paid in a way as a net result. But of course, it's only true if you have those other profitable projects. So that's why it's disabled by default. By default, if you have negative, if you have a loss period, it will just have zero tax, and that's it. And then there's more stuff. Again, I will not go into too much detail, but just to know that there is also possibility to enter income tax manually. This can be relevant in case you have some special way to calculate tax, like maybe there is some subsidies or some kind of non-taxable amounts that you have special conditions based on your industry. So this would not be so standard. So you would have to then you would have possibility to calculate it manually. So there is always, you're always covered, whatever the situation is. Okay, I don't do any of those special functions. I just stick with normal 30%. All right, so that's basic value step. We sort of define some important parameters here, and then we are ready to move on. Next step is contact information, who made the calculation, contact information, and some comments. So it's a formality, especially when working in the teams. It's very important. Okay, next. Next is the investment table. So that's where we start entering some numbers already, and starting with investments that we need to make this project happen. And first, pay attention to the structure. So it starts with so-called zero period, which is dark blue color. It's optional. You can enable or disable it in settings, but it's a very special period. As you can see, it does not have duration, like all the other periods have duration. 3 months, 3 months, 12 months, 12 months, 12 months, but not this one. This is only showing the situation at the very beginning of the whole project. So it's 1st of July 2020 in this case. So whatever you enter here, let's say minus 10 million. Oh, one more. So that means we made this investment in 1st of July 2020, and it will be discounted to that moment. So if we didn't have this period and we just have these two, for example, whatever we entered in all other periods is accounted in the end of the period. So this means end of September 2020 or end of December 2020. So that's why the difference between those two cells is 3 months. So very beginning, even though they are in the same period, so this one includes that one, but the difference is still 3 months. And then difference between those is of course also 3 months. And then this one starts right away after this one, and it lasts for a full year. So this was our construction period of 6 months, 3 months, 3 months, and then operations of 10 years. And then we enter our investments here. By default, it also puts name of the project into the first investment account. Sometimes it works, sometimes not. In this case, I actually would want to manually enter, so it will be wind turbines. So just as an investment, 10 pieces. And so let's say that we need to buy 10 turbines, and each of them costs 1 million euros. So 10 is 10 million, and we have a upfront payment for all of them. So in one payment, 10 million. And as you can see, immediately as soon as I enter that amount, we have a residual value calculated, and it's the same 10 million because I haven't defined depreciation yet. So next thing, you would define depreciation. And the easiest way is to use this cell right here, depreciation percentage, and put, let's say, 5%. As soon as I put it, immediately InvestWorks Excel started depreciating it. Notice that it's aware that it's only 3 months, and it's full year, full year, full year, all the way until you get to the residual value. And with 5%, we have approximately half left. And that's why we have 4.7 million euros left in the residual value in 2030, and basically this is added to the cash flow and then discounted to the today's date according to this calculation. So if I change it, let's say, to 10%, so 10% is actually enough to depreciate because we have 10.5 years calculation. So it actually depreciated the whole thing in those 10 years, and then the residual value is 0. At the same time, let's say that you know that in 10 years, you can sell those turbines for at least €1 million. You can actually add this 1 million here, and this 1 million will be added to the price as if you got this sold turbines, even though you discounted the whole value. It just profit of realization is accounted. But of course, that's just if it's an option. In reality, maybe we could put something like 5%. And let's put here. So this is like the quick way to do it. And if I go with the more advanced way, then I would open settings for this investment account. And then I have here many more options how to calculate depreciation value, depreciation process. So you can select what balance sheet item it belongs to, when to begin depreciation. Let's say you don't want to depreciate before operation starts, no problem. You just depreciate starting from 2021. You can select how many years. Let's say I want to depreciate in 10 years, 10%, okay. And there is even more options. Let's see if I press more options, then it has even more possibilities. Like you can have a shift factor. If you have some equipment used in more than one shift, you can potentially depreciate it more. You can continue all depreciation plans. So you have some historical assets that you want to continue, like to carry over book value or continue depreciation plan. You can do so. Then there's some other options, like you want to mark this investment as reinvestments instead of proposed. So especially it's relevant for some follow-up investment that you will need to do in the middle of your calculation, but not at the beginning. So then you don't have to put it in the proposed. It can be just part of reinvestment that will happen later, financing by the cash flows of the project, but you don't have to scare the investors or whoever will be deciding that we need all this money now. Some of this money is needed now, but some of it may be needed later, and our project will sort of fund it anyway by the cash flows. So you can actually mark it as a reinvestment. So that will not be part of proposed. And then also subventions is like positive investments. If you got a government subsidy, you can define it in this way. And many more. So again, I'll not go into too much detail, but I'll go back to less options. So it's enough for us. Just 10-year depreciation. Let's use that. And I press OK. So now it will recalculate this based on 10%. And then we have no residual value left. And yeah, on a row level, so we have by default visible 10 top level rows. So every one of those is a different investment account that can have different depreciation settings. And it just shows 10 by default. However, it supports up to 30. So if you press this button and go to investment account, investment table settings, you will see that you can actually open up to 30 different investment, different depreciation rate. You can open more, or you can also close the one that you don't need. So let's say I only need 3 accounts. So I just keep them visible and mark blue all the others. And we make it more compact. So it's easier to read. And anytime you can go back, here's a button, and you can open it back and turn them on when you need it, and so on. Okay, so I will mark this. So the first one will be wind turbine, second will be construction. And let's say that this construction will be split into 3 equal payments of maybe 800,000 each. So upfront 800,000, then 800,000 in 3 months, and another 800,000 at the end of construction. So that makes it 2.4 million for construction cost. And then total, as we can see here, and then we also depreciate it. Let's put the same 10%. And actually, I could also put it just to demonstrate again the functionality. I can go to begin depreciation only from 2021 when operation starts, and click OK. And now we have like consistent depreciation starting from 2021. And then last one will be connection to the grid. So we can have that would be happening in the end of the construction. So I would put it to the, let's say that we have payment terms in the end of 2020 in December. So let's say it's another 1 million euros. And then it will be, oh yeah, actually, I want to change something. I will put these 3% because it's real estate. And the same thing here, connection to the grid, I'll put 3%. And also put it to beginning when operation starts. You don't have to, it's like not any rule about it, but it's just something you can control if you like. Because now we have 3 different investment accounts, 10 million, 2.4 million, and 1 million euros that we need to invest. And we have the schedule of payments. When do we need to make? Here are the totals for each of the periods. And that's enough. So we have depreciations calculated. We're basically done with this first account, first report of investments. And we can go to the next step again. So next step is income statement, and that's where most of the work happens. So here you can spend time modeling your business as precise as you like it. It doesn't have to be too complicated though. It's actually very quick as well. especially if you take advantage of all the Invest for Excel features that allow you to enter, describe your business case quicker. So what could I say? So the structure is the same. In fact, we're still on the same sheet. It just uses freeze pane, so you have to use like back to get back to previous one. As you can see, it's right here. But if you use next button, it's like moves you to the top of the income statement and locks it in place. So it's more convenient to work. And then you have those 10 top level rows for income, another 10 for variable cost, and another 10 for fixed costs. You also have one for financing, income and expenses if you want to model it, and some other fields. But most important to realize what does it mean, this top level row. You can either use it as it is, let's say in income. So we call it first sales of electricity. So if I put something here, let's go to 2021. Let's say that first we got 100,000 income in the first year, just for test. And that's it, that's income. So it's part of the cash flow immediately. And we can use it, and then we can use something else for the other field. But if we want to be more specific, have some variables, describe the business model, then we have to use sub rows. And so for that, I need to press on this first row settings, press this button. Then I have a menu for adding the rows. So for example, you can add, by default, it offers to add 5 sub rows. Let's do that. And look what happened. So now we have 5 sub rows. The top level row, sales for electricity, has become locked. It's become white color. So I cannot enter directly into it anymore. Instead, I have to use sub rows. And by default, it adds them together. So now it adds all the sub rows. And this is how you tell how to calculate this. So you can add, subtract, multiply, divide, and it becomes very visible how it's calculated. So you can always see how did it, how is it calculating those variables between each other. So, and you can have up to 99 sub rows like this. So that's a capability. So 99, this like dark yellow sub rows, and under each of those, let's say, it will be turbines and then pieces. And I will show you another thing. So you can actually have, I select now the turbines row, and I could yet add another level of third level sub rows. So it's a bit lighter yellow, but this is already, so sub row, so like third level sub row, and you can have another 99 third level sub rows under each of second level sub rows. So that makes it so that you can have up to almost 10,000 sub rows under each of those top level rows. So it's very important to realize from beginning as you're starting with Invest for Excel, because this gives you the flexibility that you need. So not only you can add them, you can of course also delete them. So now I added unnecessary rows here. I don't really need to calculate turbines with 5 sub rows. I can just go and remove those sub rows. There's several ways to do it. You can either select turbines row and shrink the number of rows, sub rows like this, or you can go to this insert delete and select delete selected rows and select the ones that you don't want anymore. So I select all of them, click OK. It warns me, are you sure you want to remove those sub rows? And because you might have some data there. And yes, you are sure. And look, now this sub row turbines became yellow again. That means we can actually edit it again. So that's how it works. So we can add and remove sub rows easily, as much as we need. All right, now that this is clear, we can start filling. So I already given a name for the first variable that is part of the calculation of sales of electricity. So turbines. So we have this cell here can be used for unit, just for like elegance, for aesthetics. It doesn't really affect anything. And then we can say, again, I will start describing sales from 2021 because that's where operation starts, just so that we don't have some like during construction, so it doesn't confuse. So, and then we have 10 turbines. So in Invest for Excel, you never really have to drag those variables like this when you want to spread the value, because there is a much better function that is available. So you enter, usually you enter only starting value for something, then you use copy distribute function, which is right here, this 12 in a red square. So if you press it, and you get this kind of copy distribute menu, without looking at any of these settings, if you just press distribute, it spreads this 10 throughout the whole calculation. So it literally 2 clicks. Okay, 3 clicks. If you select the cell, go to copy distribute and distribute. And that's it. Throughout, doesn't matter how long your calculation is, it will spread it. And look what it writes. It actually writes offset formula inside. And that means that it's actually, each of those distributed values is looking at the previous cell for the value. And that means that I can manipulate data. So now if I put 15 here, all of them become 15 because they're all looking for a previous cell. So it simplifies modeling process greatly. So you don't have to not drag and not even enter anything. And at the same time, you can control some growth. If I go back to this select first cell and go back to this copy distribute menu, let's look at some parameters here. So there is annual change percentage. Let's say I wanted to grow 5% per year. I press distribute, and now we have annual growth of 5%. So, and because of this, the way it distributes this, I can also at any point, let's say I think that we will be adding until we get 18, and then it will stay on the same level. I can just select that 18 and change percentage to 0 and distribute further. So now we have this 5% growth until 2025, and then it stays on the same level. And at the same time, if I change, let's say from 15 to 100, it's still behaving proportionally the same. It grows 5% per year until 2025, and after that it stays on the same level. So yeah, this is very important function. Also very important to start using it from beginning, because basically you use distribute function almost all the time. So it's like most frequently used function. Okay, now that we got that, I will actually also use it to clear this data, because I don't plan to increase amount of turbines. It will stay at 10. So that's why I will put 0% growth and distribute it once again, and we get those 10 distributed. Okay, that's our first variable. Then next variable is capacity per turbine. So kilowatt hours. So let's say that, okay, we already don't have to stop by on this distribute. We know it's going to be a 1,000 kilowatt hours turbines. So 10 of them will be 10,000. And again, it doesn't change. So it stays 10,000. So I just distribute it as it is, just 2 clicks. And we have this 10,000 spread. And then let's put utilization rate. Okay, maybe before utilization rate, let's put hours per period and hours, because these are kilowatt hours. So that means, so in order to get how many kilowatt hours that we can sell, we are generating, we need to multiply it by amount of hours in the period. And in this case, it's actually a very basic calculation. So we can actually write a formula, and we can put, for example, 24 hours multiplied by 30 days per month. So 24 hours per day multiplied by 30 days per month, multiplied by, and then reference this cell, which always has a correct number of months in the period, and enter. So in this case, there is no point to put this 24 or 30 parameters as separate rows, because it's like everybody knows there's 24 hours in a day and 30 days in a month approximately. So this is an example when it's okay. And then again, it's just an example. In some cases, you might have a quite more advanced formula and it's still relevant. And notice what happens if I now try to distribute this formula. Excel has detected that it's not a value, but it's a formula. So instead of replacing that value with offset formula, it actually offers to copy formula. So preserve the formula the way we've written it. And I don't even have to select it, it's pre-selected. I press copy, and now it is spread. Well, of course, in this case, it doesn't really matter because it would be the same value anyway. But sometimes it matters. So sometimes you really want to keep it formula as a formula and distribute it quickly. All right, so we have the hours. Next, we have utilization rate. And that would be in percentage. And let's say that we start maybe at half capacity. So let's put 0.5. And okay, yeah, it rounded to 1. And that's not good. So we need to have a bit more. Okay, there's several ways to do it. The network cell proper way to do it is to go to select the cell, go to format, number, and then select here like percentage. But that's like a designed way by network cell. But thanks to Excel new feature, you can actually do it even quicker nowadays. Just right click and press this percentage sign. So and then you have so just 2 clicks. You save some clicks. Same way you can format currency situations, and then you can also change decimal easily. So really great. Okay, and then notice that copy distribute function also spreads formatting. So which is, you can either enable or disable it. By default, it's turned on. Copy cell formatting to target cells. So by default, it's enabled. That means if I distribute this 50%, it will also copy this number formatting. And then let's say that I could put some growth. Maybe we will be increasing utilization by maybe 7% every year. So now, in this case, again, it's just we're just playing with numbers, improvising. But in some cases, it's really relevant is how much you can control the capacity of production. In this case, it's a win, so not really, but we try to just show a good example. All right, so and then yeah, just another thing. So if you want to see the percentage, the growth percentage, to make it even more transparent, so now you don't really see it. It's 7%, but you don't see it. So you can actually use this cell instead to show that percentage. So, and to do that, you select this first cell and go to copy distribute and put this checkbox here, put annual change percentage in cell D447. So if you check that and press distribute again, so look, now this unit was replaced by 7%. And that means that we can now control it, the whole growth trend using this cell. So let's say we put 10% growth. Look, now it's growing all the way to 118%. If we put like 5%, now it's lower. So as you can see now, not only we can see the percentage, but we can also control it. Let's put it at 7. All right, what is missing? Missing is price, of course. So now we have to put price per kilowatt hour, and that would be in euros. Yep, and then let's put, again, I'm improvising, so let's put something like 10 cents. And again, it has sort of auto-formatted it by default to numbers, so I can quickly put it to currency symbol. Okay, for some reason this euro is grayed out, but doesn't matter. Okay, in this case, I could actually go to the proper settings and change this. Let's just put no operator. I don't really need currency sign. I know it's euros. Let's see, does it work? Yep, and okay, yes. So 10 cents, and let's also put some growth. Let's say 5% annual growth of the sales price of energy, and press distribute. So this is our forecast for the price development of electricity for kilowatt for the next 10 years. All right, now what is missing is how to calculate them. So right now, by default, Investor Excel adds them together, which doesn't make sense. So we need to actually tell it to multiply it. So then we use these operators on the side to tell it to multiply turbines with capacity per turbine. So like this, we get then capacity of all 10 turbines together. Then we multiply that total capacity by hours per period. So we get that not just capacity, but also how many kilowatt hours we can maximum produce per period with all 10 turbines. And then we multiply that maximum with actual utilization rate that we forecast. So with 50%, so that cuts it in half, at least in the beginning. And then we multiply those, and we get, of course, using this, we get actual generated kilowatt hours according to our plan. And then those generated kilowatt hours, we then multiply with price per kilowatt hour. And this would already give us the expected revenue. This is just improvising, so it doesn't have to be correct numbers, but you get the idea. So yeah, and just to give you an example, so let's say that we wanted to add some parameter here. Let's say we want to know how much it is generating, how many kilowatts were actually generated using in each period. So we don't see that now because it's hidden inside of this number together with the price. So we can, well, in this case, we can easily calculate it, but we don't see it still over time. So if we wanted, we can easily add one more sub row. So I went to settings of the sales of electricity, top level row, and now we got one more sub row. And look, I can also select zero operator here. So blank. So that means whatever I enter here is not part of the calculation. So I got some formatting that doesn't fit. So as you can see, it doesn't affect really. I have 54,000 here. I don't have 54,000. The result is the same. So that means I can use it for information fields. And let's see, we will use it for kilowatt hours produced field, kilowatt hours. And let's make here a formula. So we multiply turbines with capacity, with hours, and with utilization rate. Very simple formula. Okay, and then we need to format it. We don't really need decimals, so I have a quick way to get rid of them. There we go. So now we see that, by the way, if numbers don't fit, you can also use format and column width parameter and change the width, so either for one column or for many columns at the same time. So it always fits your numbers. Okay, so we have the number, and then I can distribute this formula, copy formula. And in this case, as you can see, it's changing because we are increasing utilization rate. So, well, this gives us information about how much is actually produced. And then, even though it's not part of the calculation here, we can, however, reference later in a cost section. So let's say we have some cost which is dependent on how many kilowatts we produced. So then we can link directly to here, and so because we already have it. So this is the flexibility that you get. Okay, let's say that in this very simple, in reality, of course, there is much more variable that goes into this wind power plants. It's not as simple as this, but again, for this example case, it's good enough. And we go to model some variable costs. As you can see, by default, Invest for Excel gives you some suggestions how to name those rows, because those are very frequently used. You don't have to use them though. So, okay, well, we could use it perhaps. So let's say other variable costs, we will use that, and we will calculate variable cost based on that. So again, I could use it either as it is here, or I could go into sub rows and create some sub rows. I will create two sub rows in this case. And here's an important thing to realize. All the costs in Invest for Excel have to be entered as negative values with minus. That's very important. All the costs as well as all the investments. If I quickly go back to investment table, you probably noticed I entered all the numbers with minus. So because this is outgoing cash flow. And it's important to remember. In fact, only here in an investment table, if you accidentally enter positive number, the program will react. It will ask you, are you sure this is investment? It should be with plus. Or because if it's investment, it has to be with minus, and it suggests me to correct it. Like if I press this investment, then it corrects it to minus. So as if I made additional investment to turbines of 5 million. So no, I delete it. I try again. Second option is it's suggested, okay, maybe you're selling. So you've sold those 10 million turbines for 5,000. Would you like to then close this account? And of course, yes, I sold them. And immediately it calculated this as like a realization loss of 9.995 thousand. So, and it closed the account. It doesn't depreciate it anymore. So that's important so that you have this kind of controls. I deleted it, immediately it recovered. And basically it kind of treats it as before. So, and then the same important to keep in mind that variable costs, or I mean, all the costs have to be entered with minus. In here, however, it will not warn you if you put positive number, because you could have like kilowatt hours or square meters or anything here that is not money. So it would be positive. So program doesn't know that, so it cannot check, but it's important to remember. All right, so we will have other variable costs which will depend on produced kilowatts. So I will actually copy this produced kilowatts. Just make a link, equals, and here same equals, and to that one. And then I just do it for the first one, and I copy formula throughout the whole. So with just literally 3 seconds, I got the same row replicated here with some valuable data. And it's because it's all linked, it's all still connected. So if I change 10 turbines to 20 turbines, as you can see, it changed here, it changed here. So the whole model changed, the income changed, and then the cost will change. So that's what we are getting to, that you can actually just manipulate these starting parameters, and the whole model updates based on that without need to update it in many places. All right, so kilowatts produced, and then we have some second parameters, cost per kilowatt hour produced. So that will be our variable cost, and that will be the euros. And let's put something like, maybe for each kilowatt that we sell, we have to spend maybe 3 cents, 0.03. And again, I have to format it to be looking proper. So 2 decimals. And then we distribute it. And just to be right, we also put 5% growth, so that not only cost of electricity grows, but also the variable costs are growing proportionally. So here's our forecast for the growth. And then again, we need to tell the program to calculate it. So we multiply cost per kilowatt hour with kilowatt hours. And that's it. Now we get our variable cost, which again strictly depends on our rest of the model. So this variable cost again will change immediately if we change any of the parameters here. So yep. Okay, that's good enough for the variable cost example. And then we could also some fixed costs. In fixed cost, I will demonstrate you another function of Invest for Excel that that also follows this best practice. Let's say staff costs. So if we enter something in one of those construction periods of 3 months, we have to keep in mind that this is only for 3 months. So if it's, let's say, if it's a salary, then this is 3 months salary, not for a year like here. So that's why it's important to know that. So let's say for 3 months, if our salary is maybe 150,000, and then if I just distribute it without any consideration, then it will be distributed as 150,000 throughout the whole calculation, even though this is 3 months and this is 12 months. One small checkbox resolves that. So if I just go back, go to copy distribute, and put this checkbox here, adjust with number of months per interval, and press distribute again, immediately this 150,000 turns into 600,000 in our full year period. So it detected that, okay, this is 3 months and it's 12, so it should be 4 times more to cover the whole year. The same way it would figure out if it was like 1 month periods or and so on. So yeah, that is taken care of, and maybe we can at the same time put some growth. Let's say we also put 5% salary growth to our stuff. So then now this same copy distribute function has taken care of 2 effects. First, it automatically converted it to the annual figures, and second is actually taking care of the 5% annual growth for us. So very good. So now we have some fixed costs, we have some variable costs, we have some income. And basically, it's for the most basic case, it is ready. So we can already, if we scroll down, we can already see some performance indicators like EBIT. Then we have to see some net income per period, and so on and so on. And before we proceed, I'd also like to mention that we can do some maintenance to make, again, it's best practice to remove unnecessary rows from your model so that it makes it easier to work with. Just like we removed investments that we didn't use, we also remove some rows here. And what's the easy way to do it? If you go to income statement settings, and then just 2 clicks here, select empty rows. Automatically, it selects all the rows that don't have name and highlights them blue, which means they will be hidden once I press OK. There's another possibility. You can select 0 rows, so it's more strict measure. As you can see, many more selections were made. So because then in that case, it will remove not just those rows without name, but also without value. So if there is no value at 0, it will hide it. So it's a bit more strict. Maybe I don't go that way, so I'll clear selection and select again, select empty rows. So we hide only those empty ones, and the other ones stay just for information. Okay, so it's very simple. I click OK, and now this is what happens. Now our calculation again has shrunk. We have only the rows that we need visible. Again, if we need any of them back, we can just go to settings again and press uncheck this blue and click OK. And here we go. Our top level row is available to us again. So very flexible. At the same time, you can actually use this drill down function. As you can see, there's like there's some cell that has sub rows. You can actually close it or open it with that button. So that applies to both levels, second and third levels of sub rows. And on top of that, there's even more like control that you can have. You can control amount of detail visible using this drop down. So almost all reports have this kind of drop down with 1 to 5 numbers. So what it means is amount of detail. If you go to level number 1, it will shrink your model to the maximum, like literally like leaving you only the core parameters like income, variable cost, gross margin, fixed costs, EBITDA, EBIT, net income per period, and so on. So very compact. Then if you go to level 2, it will show you a little bit more. So some parameters, some high level, and then you can at the same time drill down to see more parameters. And then level 3 will show even more, level 4 even more, and level 5 will show everything that you have. Unless it's hidden. So then you can control with hiding and unhiding. All right, so we've done some maintenance here, and we're good to go to the next step. Next step is working capital. So here is another area where best practice of Invest for Excel can really help. We noticed that in some models of our customers, working capital is not given enough attention, even though it is a very important part of calculation that can have a huge effect on the result. So, and of course, it's just something that sometimes is challenging to calculate or a bit tricky. Invest for Excel makes it very easy. So you have here this working capital section split into three areas: account receivables, inventories, and accounts payables. So how do we get our sales? First one, account receivables. How do we get our income? Do we get it upfront, so it's a good cash flow effect, or do we get them with a delay, so it's a bad cash flow effect? Or then same inventories. Well, inventories is always bad cash flow effect. If we have to stock something in order to make our business work, then of course it's always we have to buy something in advance. And then liabilities, how do we pay our suppliers? Do we have to pay in advance, which is bad, or can we pay later, which is good? So yeah, and there is 2 ways to enter each of those. The easy way and the way that we recommend is to enter average number of average term of payment in days. So let's say that you get paid on average with 2 weeks delay. So you generate electricity right now, but you get paid for it only in 14 days. So what you can do is just put 14 days here, distribute them without changes, and immediately the program takes care of that, that you're not getting this 168,000 euros in 2021. They're going to account receivables, and you're only getting them in the next year. And in next year, again, you're not getting some part, but the difference is 20,000 only. So basically, the program is taking care of that automatically with you just entering this 14. So it's quite precise, maybe not most precise that you can get, but it's precise enough for the most cases. And alternatively, if you don't want to have average days, you can actually then go to adjusted balance and calculate it precisely with a formula or with the values, any way you like, to be more precise how much is for each period this accounts receivable. You can use one or another, not both at the same time. But yeah, we recommend to use this 14 type, or I mean this days, average number of payment days away. And not only you can use it easily like this. So by default, for example, this account receivables applies to the whole income, but you can actually select only a portion of your income to apply this effect to. And you can have actually up to 5 different account receivable effects. So you say if I select 2 here, it will add another one. So account receivable 1, account receivable 2. And I can select second one for something else. Let's say we had another source of income. Maybe we have some advertisement banners next to our turbines. So we sell advertisements. So then we could have it as a separate, and maybe advertisements require prepayment. So it's a positive. So no problem. We just put it there as a second and then describe it negative 30 days. So we get it in advance, and that's it. So very flexible. The same way, I can hide it now. So we have only one again. But the same way you can have inventories, you can have different effects for different products, and then accounts payables, the same thing. So very important, very easy to use in Investor Excel, and there we go. So next is cash flow statement. Here you don't really have to enter anything unless you want to enter some kind of financing or equity changes, but otherwise it's all generated to you automatically. So let's not look at the financial part yet. Let's look at this part here from beginning. So you have income by period, then you have variable costs by period and fixed costs. And you can drill down, you can press in, you can open income. And if you had different sources of income, you would see all of them here. We have only one. So, and the same way you can drill down to any of those other parameters. You can drill down to working capital as well. So here, so here's your tax, here's your working capital, and cash flow from operations all together, summed up. Then you have cash flow from asset investments, so investment cash flow. And together they make the free cash flow, FCF. And then we continue with discounted free cash flow. So when we take into account the discounting, the cost of capital, as you can see, there's a big difference. It's immediately smaller than the free cash flow, because of the further you go in the future, the bigger the difference. And finally, there is a cumulative discounted free cash flow, which is a very important metric, because as soon as that turns positive, that means investment is paying itself off. Okay, and in our case, even though we improvised, but we actually managed to pay itself off in like 8 years or something like that. So that's good. But it's quite long. It takes quite many years to pay off. So that's important information. All right, so that's cash flows. And then we have financial cash flows. Again, if you choose to model financing, then you would do it here. There's 2 ways. You can either model it manually by just entering withdrawals and like then the amortization payments here yourself, or you can use a financing file and just well, start creating it, and then, well, it's a topic for separate webinar. So, and of course, if you fund it with equity, then you could put this equity investments here All right. So this cash flow statement. Next step is balance sheet, which is also all generated automatically, and you can just use it for analysis. So you can see how your different asset types. Okay, I didn't really categorize them, so they are all in default category of machinery equipment. I could put some of them into buildings, but this is how it looked like. There's also, if you have some historical balances, you could actually continue depreciating them here and enter how you depreciate historical balances. But okay, in this case, it's not relevant. Anyway, the balance sheet is generated automatically. We just look at it and you can see such important things as banking cash here. How is it changes? So if we were to model financing, we would need to make sure that this is always positive so that we can have negative bank account balance. And then, okay, accounts, receivable balances, and then investment book values and so on. And then altogether assets ongoing. And then, yeah, if you had some financing, it would show also long-term liabilities for each period, as well as short-term liabilities would all be described here. Whether you're using manual or automatic with financing file, it would automatically populate here as well. So yeah, okay. Next step is key financials, which is a blank sheet in the same format as the rest of calculation, which you can use for any of your own analysis, which is kind of important. By the way, since new version 3.9 of Invest for Excel that we just released, we have added a new feature that allows you to, with this extra button, to enter some interesting financial ratios. Okay, I'll just quickly enter all of them here. Just quickly, I will not go into details, but just so that you know, this is something we have gathered based on, again, our experience about what you could be looking at, what kind of performance indicators you could think about for this project. And look, I just added all of them. You can just choose the one that you like. So about liquidity, about turnover, about profitability, about business risk, about financial risk, about stability, and so on and so on. And notice that you can actually go and see the formula for each of those in a comment, how it is calculated. And so this is very interesting to learn of these different ratios that are sometimes relevant to look at. Okay, so I will let you can always actually, if you're a customer, you can try it. You can just get the new version and you'll have this function from extranet. If you're not customer, you can download a free trial from data partner website, or you can even easier investforexcel.com. There is a download form that you have to fill, and it sends you immediately your demo license number and a link to download the package. So it's very quick to download, to try it. Takes like 5 minutes to install, and then you can play with those things as well. But otherwise, yeah, next step after key financials is the long-awaited results screen. So results screen is like a summary of the whole project. It tells you what is our project, the title, wind power plant, 10 turbines. It shows total value of all investments. So we made it 13.4 million altogether that we had invested. 10% is rate of return, discount rate. 10.5 years is the duration. Calculation point is July 2020. So this is a moment of time to which all the cash flows are discounted to 1st of July. And then, so present value of operating cash flow plus the residual value, and then minus reinvestments if we had, we didn't have. And then we have total present value, and then minus proposed investments. We didn't have subventions or subsidies. So that makes us investment, that makes us the net present value. So 6.1 roughly million euros NPV. And also it says here NPV as monthly annuity. So this tells you how much is NPV it generates per month. So in case you have, let's say this project is 10.5 years and maybe you have another project of only 5 years. you cannot really compare NPV directly because it's different duration. But if you compare this monthly NPV, then you can. So that's a good metric. Then internal rate of return is actually 17%, which is pretty good because required rate is only 10. Even modified IRR is still higher than 10%. So it's a bit more stricter measure if we discount all the incoming sales cash flows as well. And then profitability index 1.46, another important metric. Payback time in years, 8 years. So exactly 8 years it takes to pay itself off. So whether it's good or not, it depends on your industry and so on. So there's some other parameters, but important thing to realize is that when you get to this screen, it's not really end of the work, it's more like middle of the work. So from here, you might want to go back to calculation, maybe you want to jump to income statement, maybe make some adjustments. And for example, one thing I recommend doing all the time is trying break-even function on your key variables. Like in this case, it would be price per kilowatt. So this is one of our core parameters for this whole project, how much we'll be able to sell electricity for. So if I go, it's very important to select the first cell from which we distribute it, so that all the others will be dependent. Like you see, if I change it to 15 cents, if you remember, all the others change automatically, and then result as well. So we have already 20 million NPV and 29% IRR. So that's how huge effect it has. So let's get back to 10 cents, how it was. And let's say I want to find out what is the break-even price, at which cost it actually just barely makes it, covers all the cost and financial requirement. So we go to, there's several ways to do it. You select the cell and go to this button with a red arrow. Right next to distribute button, there's this break-even button, and press it. I just change. Would like to seek break-even by changing active cell? Yes. And in just a few seconds, it found it. Okay, we were so close. It's 8 cents. Well, if you look at the value field, you can actually see that it's not 8, it's 7, 8, 4, 9, 4, and so on. But the important thing is that it's roughly 8. And then if you go to result screen, we'll see that NPV is now equal to 0, and IRR is equals 10. So that means we just paid itself off and nothing else left. So that tells us that, okay, we cannot go below that level. It has to be at least on that level to be profitable. And that's why we could put some margin on top of that, like safety margin, whichever we think will be reasonable. And then we know, so at which level this project will be profitable. I put something like 12%. Okay, I guess that's 22% NPV. Let's say that I decided to change it according to plan, maybe that it will be 12 cents to start selling electricity. And with 11 million NPV. Okay, and by the way, notice that immediately payback time changed from 8 years to 6.3 years only. Okay, so you can do all kind of modifications here until you're happy with the result. And then once you are happy, then you can proceed with, maybe it's actually, by the way, a good time to save the file. Save file. So we have all our progress saved. And then we can go and do the analysis. So if I go to the next step, we're taken to the sensitivity analysis, which is pre-built for us. The first one is analyzing change in discount rate. What if cost of capital changes? By default, it's plus minus 10, plus minus 20%. So what if the interest rate or conditions of our funding, of financing has changed? So we have to survive with that. How much change can we tolerate? And it seems like plus 20% to 12, we are still tolerating it with the current setup. I can also override it. Let's say, what if it changes 50%? So it gets to like, no, okay, not 50% NPV. Let's say if it grows to 15%, let's put it like this. So 50% growth. So then you have to still update the chart again, and then you see the new data. So with 15% cost of capital, we still get 5 million NPV in this case. So here's our answer. Next, if I go quickly to the next one, I'll show you just a few still. Total investments impact on profitability. So what if the investments change? Let's say maybe the turbines get more expensive, or maybe we manage to negotiate a better deal. So here is the deviations. As you can see, it's quite flat. So in this case, it doesn't really affect so much. But anyway, and you can look at it not just at NPV, but you can also look at IRR. So now I change the parameters. Now it shows our IRR percentage based on each of those scenarios. Then I can also look at it, let's say payback time. How does payback time changes? And maybe let's say that, what if we negotiate 10 million price minus 10 million and update this? Oh, I jumped to the other one, sorry. Oh, actually, no, it's okay. So yeah, with 10 million, we get 5.1 years payback. So yeah, then I'll just scroll through the others. So you can the same way analyze income impact, variable cost impact, fixed cost impact, and then you have 6 more that allow you to choose any variable from your calculation. So all those cells that you have added yourself are here. So let's say like capacity per turbine. So I select this capacity per turbine, and then as a parameter, and then I have to, because we didn't have in the beginning defined, so I have to select some data from 2021 when we have it defined, and then it will show us, okay, we have 1,000 capacity. So for example, let's say we have an option to buy more powerful turbines, maybe 1,200 kilowatt hours capacity. How will it affect payback time versus current 6.3? Let's say it will be 5.4, and so on. Just again, this is just examples, but you get the idea. And you have 6 of those, so you could have many different variables you might want to analyze, and all of them are available for analysis on this analysis tab. So what else? We have like 10 minutes left until the 2-hour mark, and I could still show you maybe a custom chart. If we go to analysis, charts, and so there is many options here with custom charts. For this case, I will show you ready-made charts. So there is a selection of charts that are pre-made. Again, these are based on best practices that we have put together that we've seen our customers use. So instead of you having to pick like by default, variable by variable, we have already packaged those. So let's say earnings and cash flow. Let's see, maybe investments. Let's go to investments charts. So just double click, and it creates a new sheet. Okay, I bumped into one issue again. Something that on my computer it keeps happening. Sorry. Okay. Let me see. Update. Maybe that will do it. Nope. Okay. And remove those and update. Okay, so we're closer, and then I will put only the years when we have the investments. There we go. Okay, so now this shows us 3 different investment types and how much we are making per year. So, well, just one example. Okay, let's go to create a few more, and then select, for example, cash flow chart. So that's the easy one. It shows you free cash flow per period using bar chart. So this is our investments, and this is our operating income starts to balance out. And then the blue line is cumulative total cash flow. Green line is cumulative discounted cash flow. So when it crosses 0, that's a break even, and everything above it is positive. By the way, since it's Excel, you can actually still apply all kind of formatting. Like if you want to change colors to whatever you prefer, you can. You have complete freedom of that. Let's add something else. Let's go to analysis, charts. It's analysis charts. Oh yeah, income. analysis. This will look like a spider. So this shows you income, variable cost, and fixed cost, and see how do they change based on how do they affect NPV, which is this y-axis, and then change percentage is x-axis. So up to 30%, and you can actually go to settings and change those parameters. So you can change the deviation percentage, and also you can add some more parameters. Let's say you wanted to add here investments, so wind turbines construction, connection to the grid. So I added 3 more variables to this chart, and in a few more moments we will have them part of the chart. Yep. So again, this is just an example. Okay, and then maybe I will, oh yeah, I will show you still one more chart type, which I like, is tornado analysis chart. So this is like, it's showing you as a prioritization. If you want to clearly show to others why some parameter is more important than others, so you can have up to 20 different parameters visualized here, and it will automatically put the most important one on top, a less important one under, and even less important under. So it's, you know, it grows with importance. And in this case, it shows 10% difference in income, and how does it affect NPV? So income is most sensitive. Investments is second less sensitive. Variable cost is third. Fixed cost is fourth. So again, I could also add some more parameters here, and it will automatically update and make this kind of tornado-shaped chart. Again, you can also apply some styling to the chart and so on, the way you like it, and colors. And otherwise, it's just extra sheet that you now have. So all these charts we created are now extra sheets. Let's go to results sheet, and I will also can quickly show you DuPont analysis. This is something we recently added, which with just one click allows you to see this kind of DuPont analysis, which is analysis of components. How is your profit? How is your result is built up with which parameters? So the income, variable cost, fixed cost, depreciations, other, and assets, cash, account receivables, inventories, others, and fixed assets, operating income, assets turnover, and then on this side, gross profit, operating expenditure, EBIT, interest, income taxes, other, net profit, operating income, profit margin, and so on and so on. And then you can also turn on this analysis for return on equity. How does it look like for return on equity? So return on assets for like internal to firm, and then to equity, which could look sometimes different depending on your situation. So this kind of analysis can be added with literally one click. Okay, maybe I could show Monte Carlo, but it doesn't fit really our time frame. So I will still show you quickly comparison table. So if you go to result, let's say you want to analyze, this is one scenario, I will save it as well. And then you considering, okay, what if we make another case with 15 turbines maybe? So let's save it under new name. Oh, okay, I'll just go the easiest way. You see these numbers from 1 to 6? Those are comparison table slots. So if you press, let's say, slot number 1, which is this case, will be inserted into new comparison table. So we don't have it really created yet. So we create a new one, and then it offers us to save it. I will call it the same name as the calculation file with comparison table in the end. And look, now the first results will be coming into the first slot. This is scenario number 1. Then we quickly go back to the file. So you don't even have to save it under a new name, even though you can. So let's make some adjustments quickly. First, we go to the name and put, okay, let's make a 15 turbines calculation. Let's go to input investments. Let's make it 15 million. And then maybe also construction will cost more. So we'll add 1 more million here. And connection to the grid is the same. Let's go to the income statement. Also with changes 10 to 15. And maybe we will also add some staff costs. Let's say maybe it will double to 300,000. Okay. Okay, that's it. We just change those like 3 or 4 parameters, and it's enough to have the second scenario. So I just go to result. I could save it as a new file name. I don't have to. I can put it the same, 15 turbines, and that's it. So now I have 3 files, and I put this into slot number 2. So let's say that this was enough, and I hide empty with just 1 click. We have only 2 cases. And look what we have, side-by-side comparison of 2 cases. Total value of all investment. This is important because it also has to do with our capabilities. Can we invest 19.4 million or 13.4? It's a big difference. Then, so present value, total present value, and then net present value. So second case obviously has higher NPV. So we have 11.9 million NPV in the first case with 10 turbines and 16.6 million in the 15 turbines case. So looks pretty good. However, if I made it on purpose so that we have actually some extra costs which are not proportional to investments. So even though NPV is higher, our internal rate of return is actually lower. That means we have actually lost some efficiency with this increase of capacity. So we get only 22. It's all very small, but still it's a difference. So in the payback time, it's 6.3 years. Payback time turns into 6.5 years. So several months more it takes to pay back. So maybe it's not significant, but sometimes it can be significant difference. So that's why then you cannot just go by NPV, but you can go by also IRR, how profitable it is, how much return each dollar or euro that you invest makes. All right, and then in the same comparison table, you can go to visually show this difference in NPV, different right time. So, and all of these you can then print out, and it's 6 projects per comparison table so that you can fit it in the same page. I will make all of these files that we created 3 files. I'll make it available for you to download. So either you have a real version if you're a customer, or if you have you want to download a demo version, you can actually open those files and look at them yourself that we just created. So you can have them. So now for some time, we are running out of time. It's actually 2 hours. So if you have to go, thank you very much for your time and for your attention. I will stay online for some time to make sure I answer all the questions. If you have any comments or questions in the chat or Q&A section. So Q&A doesn't have anything right now. I'll say the chat. Yeah. All right, I see. Thank you, Jonas, for your feedback. I really appreciate your time. So if there's no questions, then we'll conclude now. And please consider joining some of our other webinars. We will be making it on more regular basis now. We'll have many more on some special topics. Sometimes we'll repeat, sometimes we go through new features. And because of now obvious situation with this coronavirus, we had to cancel all in-person trainings that we usually host in different cities. So that's why we decided to push forward with extra effort on this webinar. So we'll have many more of these. So thank you very much once again for your attention, and have a nice rest of the day. Have a great weekend. And then let's stay in touch. Feel free to contact me if later with my contact information, which I will also leave with any questions. Thank you very much. Have a good day. Thank you.